Hello and welcome to the Trading School. Today I will talk about stock charts to help you better understand the components of a chart, such as the candlesticks, for example, and why the charts are an important part of the technical analysis in trading and or investing. Remember, we are here only for the beginner, the small investor, to help you make money and to help you understand the market. And we are not here to sell you anything. So, what makes up a chart? First of all, let's take a look at the S&P 500. Here I've entered in the top left corner the symbol for the S&P 500 index. And just below that is the symbol S&P 500, the 3-month, 1-day time frame. At the very, very bottom, we have the date line. On the right-hand side is the value of the index on any one given day. And this is live currently. So each of these, what we call candlesticks, represents one trading day. This is today, September 1. This is yesterday, Thursday, August the 31st. So let's zoom in here a little bit and take a look at what's taking place. First of all, I want to show you that, let's take this one day here, this green candle. The market opened at this point in time at 9:30. It went up during the day and down during the day and closed at this point in time right here. So if the market opened at 9:30, it could have come down. Now, if it did, and of course if we see where it did come down, this candle would turn red. When it goes above this point here, when it goes above this point, it'll go green because it's above the open. This candle here today opened at this point, which is the top, and currently it's right here at this point. So it's below the open, so it goes red. If it's above the open, it'll go green. If it's above the open, it'll close at green. It opened here and closed at this point at 4 o'clock. Also, take a look at what we call the wicks of a candle. This is the upper wick and the bottom wick. In the middle, of course, is the body of the candle. So let's get rid of some of these extra lines I have on here. Okay, so this is a candlestick. If you would change this over, we do have different patterns. Here we have a bar. In this case, at 9:30, left-hand side, this is where the market opened. It opened, it went up and down during the daytime and closed at this point. This is a bar. This is entries on the left and the closing is on the right. And vice versa. Here's a red bar. It opened at this level, traveled up and down, and on the right side, you'll see the close. Here's a bar with a very small range, from the high to low is very short range. And let's take a look at the next one, which is a line. To me, a line, let me take this out to 6 months. To me, a line chart is just general information. It does not give a lot of detail. All we can see here is it goes from this point to this point over about a 6-month period, as indicated here on the chart, 6 months. If you're trading on a shorter time frame, say 1 day, 5 minutes, that chart would look like this. But we have very little detail as to when to get out and when to get in. So let's remove this drawing, come back here to 3 months, take this one off, remove. So, and we have one more here I want to show you, which is an area. Some of you may have seen this on some of the newscasts talking about stocks. Here we run from the low up to the high over a period of about 3 months. There again is just generality. It's not enough detail to help you choose to get in and when to get out. Oh, there's one more I want to show you just in case. Let's take a look here, because here in the future we're going to have a training session just on this particular chart. These candles are referred to as a Heikin Ashi, Heikin-Ashi, Japanese term for candlesticks. And I won't get into the details of this today. Some people like to use this because here we can see the market's going up. We thought at this particular day we may have a reversal, but we did not. Same here. Here's a warning. We may reverse and start coming down in the case we did. But I can give you more details on this later. So let's go back to what we're going to be using in this series of training. And that represents the candlestick. Just keep in mind, it will open and close. It has a low, it has a high. If it's green, it opened here and moved above the open. If it's red, it opened up here and closed at the bottom. So, and in all cases, we're going to be using probably the day, 1 month, 1 day, 3 months, 1 day. These are all 1 day time frames. We can drill down and show this. From this point here, this is where the market opened. This is a 5-minute bar, or a candlestick, I'm sorry. So we know it opened, closed here. The next 5 minutes, it opened here and closed down here because it closed below the open. So right now we're down. The S&P 500 is down, moving down. It could turn back up. We don't know that yet. So I just want to give you a representation of how you can drill down to a certain minute here. We have 20 days, and each of these 20 days and by 1 hour, each of these candles represents 1 hour of movement on this particular day. So here we have 1, 2, 3, 4, 5, 6, 7, actually 6.5. That's the time frame. So from 9:30 to 4 o'clock. What's the gray area here is overnight trading. So let's remove that, go back to a 3 month, get everything back to normal. So just keep in mind the terminology, open and close, the range for the day, the color of the candle, the wicks, top and bottom wicks. So that's what we'll be using in the future sessions. Just remember, pilots use the instruments or indicators on the instrument panel. They show direction, they show speed, fuel, just like the charts are an indicator of what direction we're going. Now we can add more indicators to this chart, such as moving averages, moving average, convergence and divergence, relative strength line, etc. We'll do all that in the future upcoming sessions. But remember, the candlesticks are important. We're going to use it. You may like to use a bar. That's totally up to you. But there's going to be a lot of information coming up in the coming sessions. Wall Street, the big boys in Wall Street, they use the same terminology as we do. So let's just follow along as what they are doing. So in closing, the charts are a technical indicator. It's a price action and/or it's the direction of a stock trend. Here the stock trend is turning back upward. All this works with fundamental analysis, but in this particular series of sessions, we're going to be dealing with technical information. So we have technical information and we have fundamental analysis, and they go hand in hand. You can't use one without the other. So I hope all this has been helpful. If so, click the like button below. This will indicate to others to watch, and it'll help move us up in channel listing. Also hit subscribe if you like, and you'll get notified of future videos coming up. So remember, we're here to help the beginner, the intermediate trader or investor to get started, to understand what's taking place on Wall Street and how we can all make money in the beginning. So thanks for watching, and be sure to tune in again as I'll try to make technical analysis easy to understand. Thanks, and take care.